Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They have also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Roll Radio. We have gold essentially flat since last week, a little bit up, a little bit down. Silver's been a little stronger. It's been pushing up towards 28 on spot price. And so we're going to talk a little bit about the interchange between gold and silver today, because the ratio earlier this week did also come down and kind of double bottom a little bit, around 63 to 64. And so we're going to talk about technicals today and start with gold.
Yeah, thanks, Robert. I mean, we pointed out this double bottom in the gold price at the short-term 50% line right around 1762. Now, you may recall a week or two ago, I did mention that if gold doesn't start putting in higher highs and higher lows, I'm not calling a bull market transition, or at least short-term continuing the bull market that began a couple years ago, until we start seeing some technical reasons to do so. So we still remain in the declining channel with a couple breaks above, but we need more than just that to convince us that we're starting that second leg of the bull market.
So we've got a soft bottom at around 1765, let's say. What would you call the hard bottom? Because there's a lot of prognosticators out there throwing numbers around like 1400, etc. So what would you call the actual hard bottom from here?
Well, I think it's a time frame thing. If you're looking at your long-term Elliott wave 10-year charts, sure, somewhere down in the 1400s is completely reasonable. Me personally, I don't see a bull market that's only been in effect for the last couple years having those types of 10, 15, 20-year out technical price bottoms. So personally, I'd rather see gold stop at maybe somewhere around 1685, 1690. That's your short-term 618 fib. Generally, when you're in a bull market, you don't have these massive multi-staged market declines where you're taking into account price levels that were determined 10 and 15 years ago when the bull market just started 2 or 3 years ago. I think that those numbers matter, but I think they're going to matter on the other side, maybe developing long-term trading channels personally. So I'm still looking short-term until the short-term falls apart, and then we can look medium-term, and then we can look long-term.
Oh, that makes sense. I can understand that, because we get a lot of people calling us, well, so-and-so saying this number or that number. And so it really does depend on where you start the chart.
Right. And for me, anybody who's adding to a metals position, I don't look for turnarounds. I just look for places to add. For me personally, when I look at any market movement, say a bull market in this case, I'm just looking for the landings between the stair steps up, or like rungs on a ladder, climbing the ladder up. I'm buying gold at 1835. I'm buying gold at 1762. I'm buying gold at 1688. I'm buying gold at 1590. I'm buying gold at 1440. I'm not looking for the one place to throw all of my money in, because we don't know which of those turns it's going to be. We don't know short-term, medium-term, long-term, which traders are taking possession of the direction of the account. You know, who owns the direction the market's moving. So for me personally, I just look at for places to dollar cost in, places to step into the market, because ultimately I don't think at 3,500 or 5,000 or 10,000 or whatever the magic number ends up being, I don't think you're going to care at that point about a couple $100 up and down right now.
Because we're still in a bull market. We're not going down. We're going down in a wave pattern. We're coming to the end of the D wave. We just don't know at what point that the end of the D wave is signaled.
Right. And even still, we're talking about short-term trading floors that only go back to last March. So when I say at 1762, you know, our soft bottom we mentioned a second ago, that's a 50% correction off of the March low. That doesn't take into account what we've already done in gold. We're not even at the 382 fib yet, which would be your most shallow corrective point long term. So when they throw out numbers like, could we get back down to the March lows, 1440? Sure, still doesn't mean anything as far as potentially transitioning us back to a bear market. And there's some bigger reasons than just charting we're going to talk about here in a second when we look at some of the other commodities outside of precious metals, as well as what the US dollar is doing. So I know that especially for people who haven't been gold investors for 10 years, 20 years, 30 years, how long now, Rob? 35 years?
Well, I started as a kid back in 1973.
So I wasn't even a kid in 1973. So Robert wasn't either. So for people like yourself who look back over this at what, $35 an ounce?
It was 100.
About when you started?
It was 100.
Okay.
It had already tripled.
So at that point, it's already tripled on him, and it's up another 2,000% since then.
Yeah.
So for the long-term person, you kind of see how these big waves, as you call them, move. For somebody that's just getting interested in the precious metals markets now, especially younger clients who are looking at this compared to other assets, it's very important to differentiate between speculative investing and long-term growth.
Well, and you made a great point, too. I mean, you're looking at entry-level points at these different levels. Instead of waiting for the magic number, I'm going to do such and such when it gets to, the magic number. I've seen people try to do that, and they end up not doing anything because when it gets to their magic number, guess what they think?
It's going to go lower.
It's going to go lower.
Right.
Yeah. I mean, it's classic.
Or they do everything, and then it goes lower.
It depends upon why you're buying.
True.
A lot of people get fixated on the price action, which I understand. That's important. I remember when one of the principals came up to me at the big influencers conference in Vegas. He was with Impact, and we use them to monitor traffic to our online web account for gold called Vaulted. And he looked at me and he said, Rob, people who buy gold, are they really weird? I mean, like, buy gold and get a bomb shelter weird? And he goes, yeah. I was like, no. The reason why people buy gold, to the degree that they have lost faith in the system, that's the degree that they will buy gold. It has very little to do with the price action. They're not trying to get rich. They just have lost confidence in the financial, political system, and they just want something that's real.
Well, that's their starting point. You mentioned their starting point with the price action of where are you starting your charting, going from the low in March, or are you going to go back to the low in 2015? That's your starting point. It's the same concept as if you're starting your idea of why you want to own gold. What's your starting point? Why do you first want to buy it? Had a guy today who's been buying silver, and I pointed out to him, you are exposing yourself too much for where you're buying it. You're buying it through a place that's not very anonymous, and you're too high of a profile person to do that. Well, okay, that's his starting point, is he's been buying, but he didn't think about that second or third thing that exposes him too much. It all depends on where somebody's starting point is to whether it makes sense for them to do something now or wait for a better number. And then when the better number hits, they want to start over.
Well, and see, if I had backed off when I was 16 years old, like my father pulled me aside, Robert, gold's tripled since you bought. Why are you doing that? Had I said, well, I think I'll just wait for gold to go back down before I buy, I may not have bought. Am I glad that I bought gold at 100 instead of 50? Yeah, because I bought. And I bought silver right too. So to me, I think it's important for people to get started. Get a position, own something outside of the system, and then if you want to start, Miles, like your objective, what you guys do so beautifully here on Golden Rule Radio, show people the entry points. Once you get started, and then you want to start adding to your position, but if you haven't even started your position and you're waiting for a magic number, you may watch things move like they have for the last 20, 30 years.
Right. And I think the important thing about this conversation is to make sure we're differentiating between building for foundational reasons and then buying for speculative reasons. And the fact that we're even having the speculation conversation right now, I think just is a secondary or even tertiary reason that just adds to the argument that gold has been, remains in, and will continue in a long-term bull market as long as they are printing and spending more money than they're bringing in. the U.S. government.
It's true. I mean, 100 years ago, you could have walked into a Ford dealership and bought a brand new Ford automobile for $30, $20 bills or $30, $20 gold pieces. They were the same thing. 100 years later, you can still buy the Ford automobile for $30, $20 gold pieces, but you can't even buy the tires with $30, $20 bills. So gold, it's just money. It's capital. It moves through this period that we're in, this transitionary period. We get on the other side, you have options, you have access, you have a market, you have value. It holds value, gives you options, and that gives you freedom. Whereas if you stay in the markets, you may or may not have access, it may or may not hold value, and you may have really limited your options. I mean, you can fly anywhere in the world, hold up a gold coin and smile, and they know two things about you. One, you're trying to be nice. Two, you got money. It's a universal language. It means the same thing as a smile everywhere in the world.
Going back to your automobile example, that is beautiful in relation to what I think a lot of people's starting point of buying gold today is that they're scared to death that their dollar is going to buy less and less. And it is already. You're seeing that in the commodities indices. You're seeing it in individual commodities. You're going to continue to see this commodity super cycle sweep prices higher.
Yeah.
And we're on the verge of that.
Yeah.
It's going to be huge. It's going to be a hard place for people to navigate a rising commodity environment, which is what we're starting to see here.
In a recessionary
that's even more
economy.
painful.
This is like the 70s.
Right.
You had inflation
wait,
and recession.
Hold on. We started in the 80s, so you got to educate us here a little bit. Tell us what you mean by that.
Yes, back when you were our age.
Because it was a period of inflation, but wages were not keeping up. Jobs were hard to come by. So it was a recessionary, inflationary period, and it was very difficult for people. When I was 16 years old, gas was $1 a gallon, which sounds ridiculous, but it was like 35 cents a gallon like the 2 years before that. I felt like they were robbing me of my freedom because I just got my driver's license and now I couldn't afford to put gas in the car. Everything that we saw in the 70s, and people are expecting higher interest rates like what we saw under Paul Volcker when he took over the Fed and tried to stem the tide of inflation, where he raised interest rates to a ridiculous level. We may not see what we saw under Paul Volcker because they don't want interest rates to rise, because we now owe, what is the national debt? 27 trillion.
Yeah, so this commodity super cycle is going to be fairly hard for people to navigate because I don't think that people have lived through that. I mean, our dollar's been strong, and so they haven't had this inflationary environment. They haven't had to navigate a market where mostly all commodities are rising. I mean, what's gas up? Just here in the last few months, gas is up like 30%, and that's just getting going. So the commodities cycle has begun. I think that's fair to say.
Yeah.
And it's in its early stages.
Yes.
And so if you don't have a place to store a bunch of orange juice or a bunch of bread or a bunch of oil
Or a lot of vodka.
or a lot of soap, if you don't have a place to store all this stuff that you would need going forward in life, that's why gold and silver make sense, is because they are the financial commodity that will rise with the other commodities that are going up. That is the way to protect yourself financially and hedge against the inflation that's coming.
Well, my generation, I mean, in the 70s, we saw inflation really pick up. Wages did not increase, and people were squeezed. So we will, in my opinion, see a very similar environment where wages are not keeping up with inflation, and people are going to be really hurting.
Well, and in that kind of environment, if you can't get the fixation of speculative investing out of your head, let me encourage you to not think in terms of how many US dollars do I have, which, if we have to keep going on the irrelevance of the value of US dollars in an inflationary period, it's going to be too long of a show. So instead, let's think, how many ounces of gold could I own? Because like you said a second ago, the car, the tires, the suit versus a cup of coffee. I mean, inflation over a long period of time deteriorates rapidly the purchasing power. And there's never been a time, like you said, where wages have ever kept up. So instead of thinking in terms of how many US dollars am I worth as these prices bounce up and down, why are we not thinking about that wealth that you can take everywhere on the planet? How many ounces of gold am I worth? And this is why we have been hard pressing the concepts of platinum palladium ratio, platinum gold ratio, silver to gold ratio, why we spent an entire year last year encouraging our listeners and our clients to be buying silver and buying platinum for the sake of increasing these gold positions. And we continue to push the ratios because you can buy precious metals for all the right fundamental reasons, but still have a speculative growth component built into it.
And I would pose the question, what if we see the kind of inflation that occurred over the last 100 years with the car analogy, but we condense that into not 100 years, but to 10 years?
With the rate of inflation and how exponential growth in that inflation works, that's completely reasonable. What used to take 100 years now takes 10. And down the road, it might take 10 minutes. I mean, we saw that happen in, say, Zimbabwe 20 years ago.
Well, and the one thing that's holding back rapid inflation is the velocity of money, which fell off a cliff last year, is still incredibly low. We had a little bit of a bump upward in M2 velocity, and now it's heading back down. So we're still in that deflationary monetary velocity cycle.
And I think you're seeing that in some of the other commodities. Like we looked at gold here a few minutes ago. You look at the silver chart. And while gold is acting as that currency hedge, silver is definitely acting like the other commodities. I mean, silver took a very, very shallow correction off the August highs last year down into the November lows, and it's climbed back up. It's put in another high. It's not showing any sign of coming back down. The only ceiling silver could possibly have here, other than getting to the high, would be maybe around 28 and change, 28.50, 28.60, where you've got a little bit of a shoulder there. But if it pushes beyond that, I'd be hard-pressed to believe we're going any lower in silver. Platinum's the same thing, right? I mean, platinum put in 5-6 year highs. Platinum, on the other hand, I do think looks like it's coming back down, at least now. The reversal back down was pretty severe, and I tend to argue that continuations tend to linger. Reversals tend to happen pretty quickly. Price hits a level where it's just overwhelmed. It may try to push up again and then lose velocity. So platinum looks like it may be taking a little bit of a sell-off here, but what is that, $100? $200? Doesn't matter.
No.
So with gold kind of lingering, we're seeing this disconnect between gold specifically and some of the other precious metals, and we've seen that happen before. And my short 15 years here, and you've been here a little longer, Robert, you've also been here about 15 years. We've all seen this now at this point where you have this disconnect between gold and the other precious metals. Gold moves first. The other commodities play a very fierce catch-up. And we're seeing that even in industrial metals. You know, good old Dr. Copper up, 150% in a year?
Yeah.
And then we're looking at WTI crude, U.S. oil, up over $60 a barrel again. I mean, it's like I blinked. It was $15. So we're seeing this major commodity push up all across the board. Nickel and tin and timber and Dr. Copper and crude, and everything is pushing up. The U.S. dollar is coming down, and Robert's going to look at the dollar chart here in a minute. So it's only a matter of time. Getting back to where this whole conversation started, do you really care if gold goes to $1,650? Do you really care if gold goes to $1,440? I mean, short-term traders are going to do what short-term traders are going to do, but ultimately, you can paddle against the current all you want. Ultimately, you run out of gas and the market doesn't.
Good point.
Well, I care. I care if gold goes down because I want to buy more. I want to start another position a little lower.
Right. You could buy now and buy lower.
That's right. That's true. Dollar cost average. We'll jump to the dollar before we finish the show. The dollar index came up into that declining trend line that we've talked about for years here and has come back down, and it's barely hanging on to 90. And once it breaks that previous low, it is going down to 80, as we've talked about. But we'll see where it wants to go here. I wouldn't be surprised for it to have a little bit more of a rally in it before it declines, but ultimately the dollar's headed lower.
Yeah, and I don't see any political or economic reason for that to not be the case.
Right.
So we can talk charts, we can talk theory all we want to, but in reality, in practice, new administration, new spending limits. Is limits even a word we should use? New spending expectations going forward, increased inflation.
Foregone conclusions.
Foregone
is
conclusions.
A better way to put the dollar spending habits is what's coming.
Yeah, a weaker dollar is not going to sneak up on anybody.
No.
At least it shouldn't. Gas is up 30%. You know, they're talking about a few more trillion. Yeah, I think it's going to happen.
Well, crude's up like 300%. So 30% gas increase is not half bad.
Well, $1 off of zero is 100% change. So if it's at 60, then what is that? Percentage-wise, a lot. Right. So
pretty soon we're just going to be cutting zeros off the end of everything just to make it easy. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. It's been a pleasure having you the last couple weeks here, Rob.
Having a great time, yeah.
If you liked what you heard, hit the subscribe button, ring the bell, head on over to our website at McElvaney.com. You can find more info on Twitter at ICA Gold or on Facebook at McElvaney Financial. If you'd like to discuss your personal portfolio with one of the advisors here at McElvaney ICA, you can give us a call at 800-525-9556.
Thanks for listening. Have a great week.